Experian, sorry. Okay. So Highmark, Experian, Equifax, and Civil. These are the four companies. Okay. Experian. Okay. So yeah. So we must always here all the four companies will give you the reports. Huh? All are having the same data. Kindly note. Got it? So here RBI has made it compulsory that you must be the member of all the four companies. Kindly note this, everyone. RBI has made it compulsory that the banks need to be the member of all the four companies. Okay? This we'll see when we do our chapter civil. Those who are in the old batch, you might be knowing this. Okay? So, where is the visit done? Visit is done at least at the three places: residence, office, and security. Okay? For collecting various informations, banks take help of external agencies or by collecting documentary proofs, income, residence, age, and other information. So, the information is collected by the banks by private agencies, but verification is done by the staff. Kindly note. Verification is done by the staff. See this. Verification is strictly done by the bank staff. Okay. So collecting the information can be done by the private agencies, but verification of that information should be done by the bank staff only. For mitigating the credit risk. Now what is credit risk? Credit risk means the risk of not repaying. See, there are three types of risks. Kindly note. There are three types of risks. Which are those three? One is credit. Here, in any loan, we face three types of risk: credit, second is market, and third one is operations risk, ops. So these are the three main types of risk which every bank faces. Okay. So credit risk means what? The risk that the customer will not repay. Default of that customer. Default, NPA. NPA of that customer. So that is known as credit risk. For mitigating the credit risk, depending on the loan amount and the financial product, bank may require co-borrowers or guarantors to support the loan. Co-borrowers or guarantors. Now what do you mean by co-borrowers? Generally, whenever the customer's age is generally 45 plus, so generally the bank takes co-borrower. Okay. Guarantor. Many of the nationalized banks still take guarantors. Okay. You all might be taking guarantors up till now, right now also. In home loans, do you take the guarantors? In home loans, do you take the guarantors in home loan, personal loan? No, no. Nowadays it's gone, but some banks still have that process. Huh? I've seen certain banks. So some banks still take the guarantor, insist on guarantors. So that is gone now. Guarantor is gone actually. So bank collects the fees. So you take it. Okay. Bank collects the fees for processing, documentation and administration from the customer as a part of application processing. So what are the fees included? Whenever we charge the this loan fee to that customer or processing fee to that customer, that includes processing, documentation and admin. This supplements the bank's income. Obviously, you'll get more income in this. The second phase of loan origination is credit appraisal. See, our first phase was document collection, all these documents, verification, all these things. Second phase is credit appraisal. So what do you do in appraisal? Appraisal means checking the documents, actual checking the documents. Credit officers scrutinize the information made available to them and arrive at a loan eligibility and fix the terms and conditions to be offered to the customer. For scrutiny, steps involve confirming that the customer satisfies basic norms and policies and risk-based credit scoring. Now, what do you mean by this? See here, in loan credit appraisal, you'll check the documentation of the customers or complete documentation. Here it will include three types of documents: financial, physical, and title. What is financial document? Financial document means the customer's salary or if the customer is a business person, then the business. Okay. Physical means financial, physical, and title. What is physical documents? Means basically physical visit we call it. Okay. So the one is financial, second is title document. Now title document means what? Here you will check the whether this property which that customer is giving, or if that customer is buying a new home, housing. So whether that housing belongs to the builder or is there any legal complication in that? That's called as encumbrance. Okay. So we'll check the loan eligibility and the documents and fix the terms and conditions. For scrutiny, steps involve confirming that the customer satisfies the basic norms and policies and credit risk-based credit scoring. So basic norms and policies means what? It means basic norms means here it means DSCR. Means simple. I am giving a simple. If my net profit is NP, net profit equals to let's say 40 lakhs. My depreciation is let's say 10 lakhs. Interest on long-term loans, interest equals to let's say 3 lakhs. My total EMIs, total EMIs. Now see this, whenever I say EMI, it means your bank plus other bank. Now one thing which you must include always is this. Here, your bank means what? Not only existing EMIs. See, there are two, your bank also there are two EMIs. One is existing. If that customer is having an existing personal loan with you, then existing plus this new loan which you will be giving, that new loan is to be added. Kindly note. Okay? Because after all, he will be paying this EMI also. So new loan EMI is also to be added. So let's say my EMI for total EMI is let's say 70,000, 70k. Now you give me the DSCR figure. Everyone, DSCR. Give me the DSCR. Everyone. The salaried I'll give you, Mahendra. I'll give you about salaried. Yeah, WhatsApp group. All those who have not joined WhatsApp up till now, kindly take this link and join the WhatsApp group. Okay? See this. Okay? Everyone join this WhatsApp group immediately, because very important points regarding the class. If there is any holiday, everything is shared on this WhatsApp group. Plus, I share questions also on the regular basis. So, DSCR. Yeah. So, what is the DSCR? 14.3. 40 plus 10 is 50. 50 plus 3, 53. 53 divided by 0.7. So 53 upon 0.7, 53 lakhs, no? No. Something is remaining more. Yeah. Something more is remaining. Correct. So 53 upon, what is that? 3.7, not the 0.7, 3.7. So 14.3, correct? 14.3. So you'll add EMI also and interest on long-term loan also. So it is 3.7. So 14.3, you are getting it. Okay. So this answer you must be, means in exam you will get this question for calculating DSCR. It should be very easy for you. Sometimes they will give you net profit. Sometimes, see, generally they ask you for 1 mark. If they ask you for 1 mark, everything will be given. Now second question is about salaried person. See, this is business. Suppose if it's a business person, then this is the answer. But what about the salaried? If somebody is salaried, then where is the net profit? So in that case, you don't have net profit, you don't have depreciation. So no net profit, no depreciation. Okay. Sometimes even long-term loans are not there because salaried person generally don't take the loans also. Many times nothing is there. Loans. All the three are not there. So in that case, what will you do? In that case, you take yearly salary. Kindly note, yearly salary. Yearly salary plus any other income. Any other income means if that person is having some other house on rent, okay, or some other income which is shown, some family member might be doing the business, okay, in, PL, yeah. So that way, yeah, IT returns, Mahendra, you'll consider IT return because that is the real proof, okay. Whatever is shown in the IT returns is the real proof. Okay, agri income. That's right, Sam. Somebody might be having agri income also. So that also will be added. Yearly salary plus agri income, if any, agri plus any other. Somebody might be taking classes after the banking hours, or that person is working in some company. That person might be taking some classes. So agri, any other income. So that basically understand what is the meaning. The meaning is in the numerator you have the income, any sort of income that is added, and denominator it's EMI. Okay, so if that salaried person is there, then interest on long-term loans will not be there. So it will be only EMI, total EMIs of that customer, whatever that customer has taken various loans. Okay, so coming back, see this. So DSCR is this ratio. And the policies and the risk-based credit scoring. The third phase is disbursement. Whenever you do a disbursement, see this. Second phase is your basically sanctioning, appraisal and sanctioning. You get a sanction letter in this. After the sanction letter, you do the disbursement. In disbursement, you have three types of documents. Two basically. One is legal documents. Legal means your promissory note, your continuing letter of continuing security. Okay. Plus, basically these two are the main documents: promissory note, continuing security, and agreement. Third one. So these are the three main documents while disbursement. And in the sanction letter, if any condition is given, then that condition is to be followed. Nowadays, the disbursement is done through this NEFT RTGS only. Earlier, we used to give check. Nowadays, no check, right? Directly NEFT RTGS. Amortization schedule is prepared. Amortization means what? The loan EMI schedule. Okay. See, this is a sample of sanction letter. See, sanction letter is like this. To sir, whatever that name, then loan. This is the education loan sanction letter. Application number. Here all the conditions are given. What is the loan amount? Who is a co-borrower? What is the rate of interest? All these points are mentioned in the sanction letter. Plus any other term and condition. If any condition is there, na, conditions mentioned below. See this. This is one condition. Plus you need to have some other conditions are there. Those are mentioned. So this is basically sanction letter given to that customer. Then you have amortization schedule. See this. Amortization schedule is like this. Amortization means what? How many of you have seen this amortization schedule? Amortization schedule here means your total payment, okay, EMI, then interest, then principal, and then principal balance. Okay, this is principal balance. Okay, so total month, see this. Month means what? It is starting from month number 1 to your last month, whatever. And we need a customer signature on this. Kindly note, on any amortization schedule, we need a customer signature. Yeah, that's a repayment schedule. Correct, Vijay. So we need a customer signature. Why do we need a customer signature? Because it means that the customer has seen the amortization schedule, the customer has seen the EMI. Tomorrow the customer need not say that, see, I didn't know my EMI. This bank never told me. Okay? So in that case, we take the signature on that schedule, this repayment schedule, right? If that customer changes the EMI in between, many of the customers change now. Many customers come in the middle after 1 year, 2 years, and then pay some amount, and then they say change the EMI now. Whenever that EMI is changed, again you have to take a signature of that customer. Otherwise, the customer will later say that I don't know what is the new EMI. Okay. So next, application form. The application form is the basic. Okay. It includes all the prima facie information of that customer. Prima facie means what? All the information. What is that customer? Where is that customer living? Rented? Owned? How many family members are there? Does he have a car? Does he own something else? So all the informations. Where that customer is working, what is the salary, if the business person, then what is the net profit, everything. And from application form only we judge prima facie whether this customer is acceptable or not. If that customer is doing some, let's say, risky business, okay, like if some customer is doing some goldsmith, gold, sonar, goldsmith is a risky business for the bank. Bank generally doesn't give a loan to goldsmith, kindly note. Or if that customer is PEP, PEP means what? Politically exposed person. Okay? Politically exposed persons, banks always try not to give the loans, PEPs. Okay? Why? Because that PEP will come anytime and bring a morcha in your bank. Suppose if you harass that customer or if you tell that customer to pay the EMI, that customer will bring a morcha, means all that in your branch. Okay? So that's why bank always tries not to give loans to PEPs. Okay? Then advocates. Advocates is also in the negative list in many of the banks. Yeah. About mortgage property. Correct, Mahesh? We get all the information here. On that application form, we get the information about three informations here. I'll give you. What are the three information generally? In this application form, the first information is financials. Financials. Financial of that customer. Okay. Second, credit history. History of that customer. Third, collateral. Or that security you can call it. Collateral or prime. Anything. Security. Okay. So these are the three main informations you get about the client. Okay, on the application form. Plus is KYC is also there. Means basically your demographic or family details, you can call it. That simple word. Family details. Those are also there. Documents to be submitted for availing the home loan. What are the documents required? See this. Following docs are required. Duly completed application form, passport size photograph, proof of identity such as voter ID or passport or driving license or PAN or Aadhaar also nowadays. Okay. Proof of residence, recent telephone bills and electricity. Property tax, passport, voter ID card. So all these are taken as a residence proof. Proof of business address for non-salaried persons. Business, where that person is residing, doing the business. What is the proof of business address? Either that customer is having a proprietary business, then Shop Act license, or partnership, then this partnership deed. Or if that customer is having a private limited company, then the MOA, AOA and this GST is also right. GST is also there. That's also right. So basically, any government related document, that's important. Sale deed or agreement to sell. This is very important. Sale deed or agreement to sell. Generally, sale deed will not be there, isn't it? How can a sale deed be there? Sale deed is always done when the bank pays to that customer. Only then sale deed is done. Why will that owner do the sale deed before getting the money? Okay. So sale deed is generally done after the loan. Agreement to sell, that is there. Agreement to sell is always there. In Hindi we call it, generally we call it ISAR document, ISAR, agreement to sell. Then statement of bank account passbook for last 6 months. Okay, bank account passbook for last 6 months. Got it? In last 6 months means there we check it whether that customer has defaulted any time in any loan. Letter of allotment, NOC from housing board society. If there is a society in that building wherever you are buying the flat, then NOC from that society, okay, wherever applicable. Copy of the approved plan, wherever applicable. Approved plan means nowadays in all the buildings we have the approved plans. Okay, without approved plan you can't build a house. Okay, who does the approval? Approval is generally done by the local authority. Local authority means generally this municipality. Okay, mainly it's municipality, or if it's a gram panchayat, then gram panchayat. Permission of construction wherever applicable. Okay, permission of construction is given by whom? Suppose if you are building a house in some cantonment area, then there is a camp commander who he gives the permission. Okay. Suppose if any area is having someone special authority, then that authority's permission is required. Estimate and valuation report from approved valuers. Now, what is important to understand is approved valuers. Otherwise, what happens if you don't have an approved valuer? Approved means what? Your bank's valuers, who is on the panel of the bank. That is important. Otherwise, what will happen? That customer will bring his own valuer and give you a false valuation report. Okay. In case of agri land, do you have this NA certificate? So conversion of agri land, that is NA certificate we call it. Okay. Non-encumbrance certificate for 13 years, 1-3. Non-encumbrance. What is non-encumbrance? Non-encumbrance means that property has a clear title. Very important. Huh? If you miss out on clear title, your whole mortgage becomes waste. So clear title should be there. NOC under provision of Urban Land Ceiling Regulation Act means NOC from ULC. Now ULC is not applicable everywhere. Okay? Yeah. Authorized by bank. No one have charged. Correct. Correct, Mahesh. Jitendra, it's authorized by the bank. It's on the panel on the bank. It includes validation. Now, appraisal will include validation. Then, validation of information submitted by the applicant means checking this information collected from various credit verification agencies, property valuers, banks, advocates. So, all these will do the valuations. Banks advocate will do the legal report, search and title report. Valuer will do the valuation report. Also, there is something called as negative list. This is very important. The information is checked against the bank's policy, budgetary guidelines and risk management policies and negative list if any. Negative list means what? If that many banks have a negative areas. They don't give loans to certain areas. Okay? In your bank also you might be having it. In your branch. So negative list. It is the house or the property is always checked against the negative list. If the house property is brought purely from investment angle, expecting appreciation of value over a longer period loan is risky and tightening norms related to margin, security and guarantee must be applied. Means what? Suppose if somebody is buying the second house only from the investment purpose, okay, only from the investment purpose. In that case, you should never you should always be very tight in giving the loans. Why? Because if I buy it from the investment purpose and if I don't get the returns, then I might be in trouble. Okay? Yeah, correct, Jitlal. Education. This is always there in a negative list. Yeah. But in our banks, we never considered education means this professors. You mean to say professors are in the negative list? Because in our banks, we used to give majority loans to the professors. Where they were very good repayment masters in loans. Do you have a negative list in your bank also? Which all negative list do you follow? Area wise. There are certain, you don't have it, no? Yeah. Because in our banks, we had some negative list. When I was in HDFC Bank, we had a negative list. Appraisal form for home loan. Now for appraising a home loan proposal, the appraisal will include the following. whether the borrower is eligible as per the bank scheme, considering his age, income, length of the service, in case of salaried person, area or locality where the house is constructed, negative list. For this purpose, bank develops risk asset acceptance criteria. So basically, what does it mean? It means you'll check all the details of the customer: level, age, length of the service, salary. In case of business person, you'll be checking the net profit and the turnover of the business. You'll get a current account statement of that customer. Okay. Amount of loan, you have this risk asset acceptance criteria. Risk asset acceptance criteria means every bank has this policy. Okay. Amount of loan that can be granted based on the loan period of repayment. Now, period of repayment means what? Understand this concept. The more is the, generally public here. CA police in negative list. Acha, you have this or what? Are you in private bank, Mahesh? Because private banks have these things, huh? CA police in negative list. Generally, what happens? Private banks have these all negative lists. They don't give loans to police. They don't give loans to CAs. Okay, they don't give loans to advocates. They don't give loans to PEPs. Private banks I have seen because I was working in private banks, no? That's why. Then you are right. Even in cooperative bank, I was in cooperative bank also once. Means my first job was in cooperative bank. There we had all these negative lists. Okay, but nationalized banks can't do this. Kindly note. Nationalized bank officially, I am not saying unofficially. Even officially, you can't also do it because even cooperative banks or private banks officially cannot say that we don't give loan to police, we don't give loan to CA. You can't say officially. Unofficially, you can do anything. That's a separate angle. But officially, you can't say anything like this. Negative list is always within the bank. It is never published. Kindly note. Otherwise, what happens? There will be huge cases against the bank. On what basis are you saying that we are in the negative list? Okay? Got it? So next. So amount of loan that can be granted based on the period of the repayment. Period means what? Kindly note, loan has a very simple policy framework. Longer the period, higher the amount and lower is the EMI. Logic is very simple. Longer the period of the loan, higher is the amount and lower is the EMI. Simple logic. Okay. If the loan EMI is for a shorter period, then the EMI amount will be more. Okay. So amount of loan that can be granted based on the repayment, income level, amount of installment, value of the property, loan to value ratio. What is loan to value ratio? If I am having the property of let's say 1 crore, then what is the amount of loan can a bank give me? So it's like this. RBI has given 3 norms. One is below 30 lakhs, second is 30 to 75 lakhs, next is above 75 lakhs. So if my loan amount is below 30 lakhs, okay, then my if my property valuation is above 30 lakhs, then my loan amount will be 90%. If my property valuation is between 30 to 75 lakhs, then my LTV ratio. If my property valuation is, then my LTV ratio will be 75% only. Okay. So this is known as LTV, loan to value ratio. Okay. Legal aspects like 13 years, search and title report of 13 years, that is taken. Creating the mortgage. So mortgage is always done nowadays, we do it equitable mortgage, right? Creating the mortgage, equitable mortgage. Okay. What is this search report? Search report will give you the idea that the property is free from any encumbrance. Means it is clear title. Free from encumbrance means clear title. Encumbrance means somebody is staying there or not, illegally, legally, whatever it is. Valuation of the property is to be based on the construction type and location. Okay. Pre-sanction inspection certificate, inspection of site. So pre-sanction inspection is to be done. Margin to be contributed by the borrower vis-a-vis the total cost. So margin means this. Below 30 lakhs, 90% loan, 10% margin by the customer. 30 to 75 lakhs, 85% loan, 15% margin. Greater than 75 lakhs loan, 75% margin and 75% loan and 25% margin. What is prime security? Prime security means that security which is made from the bank loan. Understand this? Okay? Made from the bank loan means what? Suppose if I say I buy a car from the car loan, so then that is a prime security. Okay? Suppose if I buy a house and take a housing loan, so then that is a prime security because that property is built from that loan. Okay? Next, margin to be contributed done. Interest, both fixed and floating rate interest may be given. Now, what is fixed and floating rate interest? Fixed and floating interest means, see, there are two types of loans interest nowadays. RBI has given very clear indication that all your home loans need to be EBLR based. EBLR. What is EBLR? External benchmark lending rates. What is external benchmark lending rates? External benchmark means basically there are two types of EBLRs. Which are those two EBLRs? See this. Floating rate loans. There are EBLRs. One is this repo based, and second is FBIL, Financial Benchmark India Private Limited. This is a company owned by RBI. So these are two benchmarks for floating rate loans, and for fixed rate loans, it is decided by the bank. Okay, fixed rate loans are decided by the bank. What is the rate they have to give? Generally, fixed rate loan is bigger than the floating rate loans. Okay, generally fixed rate loan will be always higher than floating rate loans. If my floating rate loan is, let's say, 8%, then my fixed rate loan will be 9% at least. Okay. Insurance, cost of insuring and the house flat against the risk, earthquake, etc. Now this cost is borne by whom? Who will pay the premium of this insurance? Customer, not the bank. Okay, bank will never pay the insurance. Okay. Now look at the parameters of calculation. See this. There are two parameters. One is gross level. This is based on property. Gross level based on property. And second one is net level based on income. Net and gross. First one you can call it based on property. Okay. So what we'll do? Based on property first we'll do. How is it done? Suppose loan amount requested. I am the customer. I'll fill up in the form what is the amount of loan I want. I'll say I want 50 lakhs. Then this is based on the property. So what will you do? You'll find out the cost of purchase, construction, renovation, whatever that cost is. Okay, plus registration fee. Amount under B above less margin stipulated means if my cost of construction is, let's say, 30 lakhs. Okay, I have applied for this loan, let's say 50 lakhs. See this case. Now one thing you must note, cost of purchase, construction, renovation, repair, this will include in case of flats. Flat cost plus car parking plus electricity plus stamp duty registration. All these will be included in the cost. Okay. So now let's see. In this, the customer will also bring some margin. Let's say 15% margin. So in that case, what should be a loan amount? So less margin stipulated. Whatever is the margin that will be brought in by the customer and remaining amount will be given by the bank. Now between A and C, loan amount requested and amount of after calculations, whichever is less. Whichever is less. Okay. So now let's see one numerical. Flat is costing 50 lakhs. Loan application is for 30 lakhs. Okay. Now salary of that person is, let's say, 50,000. Net salary is 40,000. Now this we'll see it later. First part is this. Flat is 50 lakhs. Loan application is 30 lakhs. Let's say margin is 10%. So what will be the loan amount you will be giving? Based on the property only. Forget the salary and everything. Don't look at salary right now. So flat is 50 lakhs. Loan application is 30 lakhs. Margin is 10%. So what is the loan amount you will be giving? Who can tell me now? What is the loan amount you will be giving? You will be giving, see here, either the loan application amount, no, not 45 lakhs. See this, understand. Flat is, what is the cost of flat? 50 lakhs. So margin is what? Margin is 10%. So you'll be margin, subtracting the margin, it will be 45 lakhs. But now there is a problem. What is that problem? That customer has applied for loan only for 30 lakhs. So even though after the margin the bank loan is coming out to be 45 lakhs, but customer wants only 30 lakhs. So you will be giving only 30 lakhs then. Want lesser loan, why should you give me higher loan? If I want lesser loan, why should you give me higher loan? So this is based on the property, kindly note. Based on the property, I will be giving 30 lakhs. No, I won't be giving 27 over here. I will be giving 30 lakhs. Because this 30 lakhs amount is much less than the calculations. Okay? Got it? See, loan application or the calculations, whichever is less. Now this is based on the property. Okay? Now let's look at the second part. See this. One is based on the property. Second is based on the income. Now let's look at the income. For income, what do we have? See here, there are two ways now. One is gross, second is net. In gross income, it includes gross income. Now look at this. What it includes? Income of the applicant means that borrower, spouse, husband or wife. Suppose if this borrower is husband then wife. Borrower is wife then husband. Okay? Income of the spouse. Other income if any, means agri income if anything is there. So whatever is this total, means gross plus add all this. Okay? So this generally it is taken 50 to 60% of the future rental. Means suppose if I am buying this house for let's say property, for investment, then I will be putting it on rent. So if I put it on rent, then 50 to 60% of the annual rent is considered as my other income. Okay? This is known as gross. Then net. Net is same logic. Net income of the applicant plus net income of the spouse. Other net income if any. Again 50 to 60% of the future rentals. Now in this case what do we do? For gross income, we multiply this whatever answer is there. Multiply it by 36 times. For gross income, we multiplied 36 times. Okay? For net income, we multiplied 60 times. 60. Now, among these two, what do I do? Whichever is higher. Gross income into 36 times or net income into 60 times. Whichever is higher. So, I will be giving higher of this. But now, let's go back to parameter 1 and 2. So, now, as per parameter 2, based on income, I am getting whichever is higher. Now, eligible loan amount is, look at this, eligible loan amount will be lower than parameter 1 or parameter 2, whichever is lower. Okay? So, above it is higher, 36 and 60 times higher. But once you get this higher amount, then lower of parameter 1 and parameter 2. Now, let me explain you this using this image. See how to come to the loan amount. there are two criteria. One is property, second is income. In property, you did it that whatever is this property value or whatever is this amount requested. So that is property, parameter number one. In income, you have gross and net. So gross you will find out 36 times, net you will find out 60 times, then higher of these two. Okay? Higher of these two. But in this case, whenever you do it higher of these two, so this higher amount or this property amount from this criteria, whichever you are getting, lower of these two. This is the logic behind it. Okay? Got it? Video quality. Any problem with the video? Ajay. Everyone, is the video coming up very poor? Means you is it blur? My video? Everyone? Is the video coming blurred? My video? No, no. Is it somewhere? Yes. Blur. How come? Let me see. Because here I am able to see it clearly. Oh. How come? Because here I am able to see it very clear. Let me check with the admins then if there is any problem. Okay? Means only video is blur, na? My video is blur. The screen is okay, na? Remaining screen. Acha, Jitendra, it's okay. Okay. Chalo, let me check. Okay? I'll check this. Why is this? Because others, let's see tomorrow. Okay? We'll check this tomorrow. So, here we'll stop over here for today. Okay? 36 times or 60 times. Look at this image part. Huh? Always look at this image part. Loan amount will always be decided based on either property or income. In income, what do we do? In income, you take two parts, gross or net. In gross multiplied by 36 times, in net multiplied by 60 times. Whichever is higher. After this higher, decide between higher and the property. Whichever is lower. Okay? So you have to find out the loan criteria always based on the two parameters. One is based on the property and second is based on the income. And whichever is lower of these two, you should give the loan. Okay? Chalo. Tomorrow we'll do the remaining part. Okay? Chalo. Bye everyone. Yeah, questions. I'll give you this question bank only. Ajay. Okay, how many of you are having this PDF or not having the RBWM PDF? How many of you are not having the RBWM PDF? Okay? No? Achha. Tomorrow, remind me, tomorrow I'll share the complete RBWM PDF with you. Complete. Okay? Complete RBWM PDF, I'll be sharing it with you. So you need to read only that plus my classes. That's it. And your paper will be clear. Okay? Complete RBWM PDF. You will score more than 70 marks. More than 70 marks. If you read that PDF and the classes. That's it. Okay? Tomorrow I will be sharing it. Okay? Chalo, bye.